Good morning. Welcome everyone to today's webinar on the subject of open banking, wait and see or be a first mover. So today what we're going to be doing is looking at the opportunities that open banking can provide to wealth managers and savings and investment firms in the UK. So I'm very excited to talk about this topic because when we speak to the industry about their challenges and the problems they're facing, open banking is always in the top 3 industry issues that practitioners want to talk about. It feels like it's definitely one of the big coming trends that's at a tipping point in wealth management. So a very exciting topic for us to talk about today. So today I'm going to be talking to Stuart Duncan about this topic. Stuart is a partner at NextWave. NextWave are a consultancy who specialize in defining and delivering transformative change in financial services, and they work with some of the most innovative and advanced technology solutions on the market. So Stuart is a seasoned financial services leader responsible for defining and delivering large change programs of some of the biggest, most complex financial services organizations in the world. So good morning, Stuart. Hopefully you're as excited about this topic as I am. Good morning.
Absolutely. Good morning, Jeremy.
So on our agenda today, you can see the slide up there. We'll essentially be talking about, firstly, what open banking is, just making sure we're kind of level set in terms of what the topic means, and then what the key trends are across financial services. Then we're going to narrow down very specifically on the wealth management sector in the UK and talk a bit about what is the industry thinking on open banking, what are the opportunities that it offers, and what are people doing in that space. Next, we'll be talking about the business benefits that open banking can bring, and particularly the Cashfac and NextWave open banking solution that we're discussing with many practitioners in the market. And then finally, we'll talk about urgency. So, the big so what question. What should wealth managers and savings and investment firms do in building their open banking capabilities? What's the urgency? Which client segment should they be thinking about? And what are the sort of considerations that they need to consider when deciding how to develop these open banking capabilities? So that's a little bit about the agenda. In terms of the format of today, what we're going to be doing is talking about these topics for about 30 minutes. During that time, feel free to raise any questions in the webinar, and you can raise them directly in the platform. So all these questions will be treated anonymously, and we'll do our best to answer them as we go along, and at the end after our discussion on the topic. So firstly, let's introduce ourselves to the topic of open banking. So there's a lot of chatter in the market on wealth management, Stuart, as you know. A lot of people are talking about open banking. There is starting to do some initiatives. Some of the wealth managers have already implemented some capabilities in this space. So it's a topic that, a lot of senior leaders and transformation leads who decide, what to invest in and when are discussing that and how to take it forward. I think we all sort of know at a high level what open banking is. It's a regulatory initiative that the UK government and other governments in the world are pushing to, I guess, drive innovation in the banking space. And that can cover many things around payments and other components of banking services that the FS industry offers. It also links into latest technologies such as the use of APIs and the whole customer experience around the experience of the end user who's using financial services and how they interact with their providers. So I guess, it's a big topic, right? There's lots of use cases. Perhaps you could give us your sort of whistle-stop tour of what open banking is in the UK and where we are now.
Yeah, just probably useful a brief cap of what's happened and what the objectives were over the last few years. So open banking was introduced at the beginning of 2018 in the UK. It was really, as you say, it was generated from a sort of regulatory perspective. So in the European level, we had PSD2, which was a directive over payments. services, and the UK implemented their version of that, so in 2018. And the idea really here is to a couple of things. One is to really open up the consumer small business banking market to a wider set of participants. So the market was traditionally dominated by a small number of very large companies, the UK clearers and some other large banks, and also really to drive innovation. So that's really around using innovation to drive more choice, more products, more services for consumers, and actually small businesses. So initially, I say it was regulatory driven through restrictions, legal regulations that came in for the larger banks. So the CMA 9, there were 9 of them in the original group, and they were required to basically implement open banking. And those original companies accounted for around 90% of the business accounts, the accounts that were used by consumers and small businesses. So a very large share of the market.
Yeah.
To go through that, you mentioned the APIs, but to go through, I mean, in terms of what actually happened, those original companies had to fund basically the setup of open banking via something called the Open Banking Implementation Entity. So really the body that oversees it, and what they do is really set the standards and the guidelines for the industry about how it's used. And as you said, one of the big, really game changers and things that it did was really to standardize the way that information's presented and passed between participants in the market through a set of sort of code and protocols called the APIs. So effectively standardized interfaces for passing information between people in the market.
Okay, yeah, that's great. I mean, and I think that's a good kind of lead off for the next topic, because, as you mentioned, it was initially a regulatory push. It was led from the top, as it were, with a regulatory framework. It wasn't bottom up, a commercial initiative. So those 9 banks were essentially forced to adopt it, and in a way, it was kind of a recognition at the regulatory and governmental levels that the industry wasn't innovative enough. So in a way, the banks were sort of pushed to do it.
Yeah, absolutely.
What we have seen, I guess, is obviously the banks had to do it. So there was a minimum baseline that they had to do. But where we are now is, there is, I think, over 5 million users now in the UK of various forms of open banking. Whether they know it or not, because often consumers don't realize that they're using open banking. So there has been quite widespread adoption. In terms of what you're seeing, before we go into the wealth management sector specifically, in terms of the banks and financial services generally, obviously there was, as you mentioned, they were pushed to do it. What are you seeing in terms of adoption levels? Do the banks still see it as a must do from a regulatory perspective? Do they see the commercial value themselves in adopting open banking and pushing it rather than just doing the minimum?
Yeah, I think as you say, the adoption has clearly been high. So I think there's something like over 300 regulated firms now in the ecosystem. Who, that includes obviously account providers who are now there more than the original 9, but also payment service providers, etc. So that ecosystem's really taken off. I think, I think the estimate for the government is by next year, over 60% of the UK population will be using open banking in some format. So as you say, they may be using that, they don't know about it, but they're using that in the background. I think in terms of the banks, I mean, initially, of course, this was seen as and it was costly, so it did cost banks a lot of money to implement, set up. Initially, it was seen as a little bit of a burden. But I think, they were very quick also to see the opportunities to use it commercially and to monetize it. That includes the ability to really tap into the ecosystem themselves and then work with partners in terms of automating their processes, the way they sell products as well. So although it brings threat, banks have, you know, a lot of technology capability and a lot of customers and a good customer network that they can use, and they can leverage the technology to drive value for themselves as well. The banks absolutely were, I think, driven by the threat of competition, and that made them up their game. And then really seeing how they could use the technology and how they could stay ahead of the competition. That was certainly part of it to me. That also includes using some of the technology internally. So APIs, you know, are very powerful in terms of connecting with it externally, but also you can use it to rationalize your own internal flow of data. So a lot of companies have, let's call it a spaghetti of systems and bespoke interfaces, and they're sort of seeing massive drive to use the same technology internally as well as externally, and then drive down, you know, costs, etc. on that. I think the other thing is really to think about what's going on commercial in the market relating to open banking, and I guess the advent of technology and how it's being used. So I think a lot of interesting things on the, you know, a macro scale in the market that are related to this whole theme. So, you know, you've got a changing generations where, you know, the younger population is increasingly using mobile digital channels. Particularly, you know, look at Gen Z, millennials, sort of early mid-20s to 40s, and they are actually the most likely people to open up their services to open banking, and the stats show. And of course, that as the population shift, people that group gets older, they will in turn be a consumer of a lot of the services, and a big customer base, and that's only a one-way trend. The trend to a irreversible trend to a cashless society, and, you know, online, you know, use of online payments, again an irreversible trend related to this as well. And what does that mean? We're seeing more and more payments online. That was obviously accelerated by the pandemic, where, you know, people were avoiding, consumers, retailers avoiding using cash, a lot of online purchases. So we've seen an acceleration of really, again, the use of mobile, the use of and all this is really sort of API enabled technology related to banking capabilities. So I think some of those, you know, and that's increasingly becoming just more and more prevalent. As you see bank branches close, we've seen spending limits increased on contact cards to £100 recently. So this is an irreversible trend. So what I'm saying is there's a backdrop as well as where the market and the consumers are just going more towards that sort of technology-enabled experience as well.
Yeah, and that backdrop I find very interesting, because, as you say, it started with the banks as a regulatory requirement, open banking, they had to do it. But then it does feel to me that after maybe a slow start, they realized the commercial opportunities that it would offer, partly because of the threat, but also the opportunity. And, you know, as you say, they have, I mean, I worked in banking, 10 years ago now, and since then they've developed much more sophisticated understanding of their ecosystem, working with partners, deploying open banking technologies, as you say, internally as well as externally. You know, you've got the big demographic changes that you mentioned. So banks, I think, have sort of transformed in response to that. But so it'd be interesting to talk a bit more about, you know, those trends and where the wealth sector is in that backdrop. So maybe we move on to that now, specifically to cover open banking and wealth management, because, you know, given that, you know, that backdrop you mentioned, the banking space, it doesn't feel like the wealth and investment space is quite there yet. You know, from clients we speak to and prospects we talk to, industry practitioners and partners, you know, clearly some firms have adapted to open banking in wealth. You know, we've seen the likes of Nutmeg have an open banking capability. They've had it for 2 years at least. Aberdeen, obviously you acquired II. They have open banking capabilities in their mobile app. And yet, those are examples. And actually, we've seen wider adoption in the pension administration space, for example, of open banking. And yet, in the wider wealth management space, it feels a bit like wealth is where banks were maybe 2 years ago.
Yeah.
And maybe that partly is because COVID, came along and made other things more important for a couple of years. They had other digital processes that had to cope with COVID. But it does feel like a lot of the industry is still dipping its toe in open banking, working out what use cases to do, what the commercial benefit is. And then this whole concept of the ecosystem and understanding the market, that's quite a difficult skill set to build up internally. So that's kind of my sort of reading of where wealth is. What would you add to that?
No, I'd agree. I think wealth, companies I've looked at, they're on various stages. I've called that digital maturity journey and embracing things like open banking. You see companies who are starting to use a lot more on the mobile, which I always think is a good barometer, giving a little bit more service to their customers online, particularly through mobile. I think others, I'd say, have a more legacy view of technology, pretty basic sort of customer portals on the internet.
Yeah.
So I haven't really invested in that area. I mean, the question is really, I think, again, the backdrop of that. Again, if I go back to the banks, as we said, there was a regulatory imperative to do some of the foundations of this. But also there was the banking market has opened up to a lot of competition, particularly in the payment space, where the barriers to entry around the regulations required, but and really, you've got it's a really open market, and it's a low cost to entry. It's facilitated by open banking, so you see a lot of competition in the payment space, particularly, and that's caused, that's acts as a catalyst for the banks to do something.
Yeah.
And I think maybe in some of the wealth space they haven't had that competition, or perhaps the incentive. So with all big change, it requires some incentive or threat or something to really get that momentum going. And perhaps that hasn't happened in some of the wealth sectors as much as the banks. That doesn't mean the opportunities aren't there, but I think that's probably one of the reasons, perhaps, why it's lagging a little bit behind.
Yeah. And it feels like maybe if the biggest opportunity, do you think, is in the mass affluent space? Because if you go back to the trend that you were talking about, the ease of use, demographic change, younger consumers, all that kind of stuff, at the higher end of the market, the ultra high net worth, they're kind of happy with, fairly manual processes, less digital, all that kind of stuff. And maybe it's a younger mass affluent who, for firms coming to market, that's where the big commercial opportunity is.
Yeah, I think that's right. I think, with all industries, it's, there are certain aspects of the business. So let's say, mass consumer, that really lend themselves to very quick automation, a lot of work online. You don't need so much time with your customers, and they need less advisory work, etc. It's pretty transactional. So you see that in retail banking, you see it in, let's call it, investments side of things. But as you say, as I also think, again, I think if you're maybe a traditional wealth company, you're used to that very high level of personal service with with, let's call it, high net worth individuals. Then that's kind of that model is how the business has been built, and people want to kind of carry on, and that personal relationship is very important. Now, that's not to say that there are not opportunities to help people. For example, you can still provide your customer with a lot of great information. You can make it easier for your customer to transact. And you can give them better information on their investments and stuff. So there's still a lot you can do, I think, with open banking and other technology to make your customer experience better, which doesn't necessarily replace that face-to-face service or whatever that you're offering, but it will enhance it, to me.
Yeah, I think you have to take a sort of customer sector or segment view of it.
Yes.
Who are you going to target open banking at? What's the commercial benefit? And I guess cost comes into this. You and I both worked on big transformational projects, but it doesn't feel like open banking, from an implementation perspective, is a huge cost to develop for wealth managers. It's more a case of, well, who are you going to target at? How are you going to charge, if at all, for the service? And what's the rollout? Do you offer it to new clients or the legacy back book? What's the deployment plan? So from a cost perspective, it feels less of a factor in the decision. It's more a case of, well, the commercial offering and who is it for and which use cases you're going to offer.
Yeah, I think you're right. I mean, the cost of investment of some of the things we're talking about is not very high.
Yeah,
It's a lot lower than replacing some of your core, let's call it back office platforms. I
yeah,
mean, we're talking a relatively small cost here. That's partly enabled by say the solutions like you have already, or the API that allows you to tap into data very
yeah,
quickly. But also, if you're building sort of mobile apps, things for people, again, you can build that without really having to be too invasive on your existing technology stack.
yeah,
And you
yeah,
can do that very quickly as well. And there's a lot of technologies that allow you to do that. And you can start small, right? You can build that over time. So again, it's not, Jeremy, you and I have worked big projects where it's quite a big bang approach. There's a huge change.
yeah.
This thing can be done. This sort of investment can be done in a much more iterative manner.
Yeah. Well, maybe now is a good time just to spend a few minutes on the Cashfac digital open banking platform, just for a couple of minutes. If you can skip to that slide in the deck, thank you. So this slide talks to the Cashfac digital cash platform for open banking, and some of the use cases in particular that you were just mentioning there, Stuart. If we talk about the reason why we developed this solution was purely from a commercial perspective. So we came at the open banking challenge from the case of, well, what's the commercial benefit going to be for a wealth manager, and in particular, what are the most important use cases to look at? Because open banking, as you know, is a very wide topic, lots of different use cases, and everyone's sort of playing around in the market trying to work out which are the most valuable. And we came at this from that case of, well, the most important use cases are the ones that are going to be more commercially attractive to that mass affluent space. So, the three use cases that we've built into the solution is firstly that fully integrated digital interface that allows real-time investments. So, one of the main challenges that when we speak to wealth managers is, the end customer, it's quite hard for them to transfer funds in, and even then hard for them to transact in the wealth manager's products. Whereas at open banking, essentially it's instantaneous. You can essentially trade in and out of your own retail bank account, fully integrated into the wealth manager's app. So, that's clearly a client retention and asset retention pitch from a commercial perspective. The second use case that we built into it was the automated financial advice provision. So, you mentioned that earlier, the sort of nudges and the advice that you can give to those retail consumers. How much capacity have you got in your ISA? How much excess have you got that you can use up? Have you got capacity in your pension for that year for further additional contributions? And allowing that to do very real time digitally through an app. And then thirdly, the third sort of use case is more of an internal one that we thought would be very valuable to the wealth managers, which is open banking actually allows the internal management of cash to be done much more efficiently because you're using the APIs. And the open banking rails, as people call them, the matching of inbound and outbound cash is much easier. So where you've got your back office behemoth and operations team doing reconciliations, managing cash, using the open banking capabilities does make that operation, much more streamlined, and almost 100% matching in terms of receipts and what you expected to receive. So the sort of platform that we've developed it's all about that competitive advantage. It's building on those demographic trends we talked about earlier. The digital users, they want ease of access and a modern platform. They want to do everything in one place. They don't want to go to their pension provider, draw something down, then move that money to their bank, and then send it to their wealth manager. They just won't do it. That's just not how they work. So they want to do everything digitally in one place. So that's kind of how we've approached the problem, and we're getting a lot of traction in the market from people who see the commercial benefit of that. So do you feel that that's sort of, in terms of the priorities of where the industry is looking at, is that where you think the sort of focus is in that mass affluent digital space?
Yeah, I think so. I think if we just think about what I guess companies want to achieve. So really, and you touched on some of these things earlier. You're really either looking at growing your customer base, and preventing customer churn, retaining your customers.
Yeah.
So I think that really is, for that strategy, it's really around the service that you're offering to your customer, and that's where things like making it easier for them to transact, making it offering them personalization and the recommendations that you're talking to, and being able to market your products effectively, which is what this allows you to do against that backdrop, is really powerful. And then I think really what else, people are trying to manage costs, right? And managing costs, increasing profitability, is really largely hindered on automation, and that's where the other side of this really is just to automate. I call it the basic processing, but really around the payments and receipts. So what anyone can start on these bits independently. You can start on one area depending on what your particular priority is, but they're complementary, and they're either driving your top line or your bottom line right through these initiatives.
And everyone has to work on these the business cases that underpin these investments. But as you said earlier, it does feel that to implement this sort of thing isn't the most complex of projects and doesn't involve huge sums of investment that's required. So it does come down to more the commercial imperatives and the cost imperatives, potentially reducing those costs, as you mentioned.
Yeah, I mean, I think the other thing, just to emphasize, obviously, which I see on here, is really around the control aspects as well. So I think which you've got on the slide, but while you want to grow your business, be profitable, clearly you also want to make sure you do that in a controlled way. And I think some of the inbuilt controls we've got in the solution around cash, and of course controls around cash are pretty important and critical to everyone, and client money, and making sure that your payments are accurate and controlled is absolutely key. So I think there's a good bedrock on there. What obviously you don't want is to implement a lot of innovation and then have control issues. So I think that's just really important to consider as well.
And that's something we haven't really spoken about. I mean, there is that risk of, if you are building in the front end new open banking capabilities, it is leading to different payment types, increased volumes, and if that isn't then integrated into your back end, and really understanding how your cash and client money processes are impacted by that, then there is the risk of you might be delivering for the front office and the client advisors, but the back office, as normal, suffers, and then potentially you've got a client money issue. So having it, from our perspective, having it fully integrated does strengthen that control framework.
And of course the risk or the controls vary according to the process. So it's obviously movements of cash are be tightly controlled. If you're doing things like recommendations, just giving information to people, there's less criticality. So you kind of just need to make sure that your control framework's appropriate for the type of change you're moving. You're making.
Okay, let's just move on to the final topic, which I guess is a sort of so what, as colleagues of mine used to say in consulting. What's going to happen next? So, and what I mean by that is, what's the urgency of wealth managers to do something? The title of this is wait and see or be a first mover. I mean, we've seen, when I've heard people say, well, in 3 years, the entire wealth industry will have open banking in some form or another, across, maybe not across all segments, but certainly across all of their business. And then I've heard people talk about a window of opportunity. Firms who do it will be the first mover, and if it's done in the right way, then they will then take a fair chunk of assets and customers from those who haven't, who then are in catch up. And as we know, often, and for that demographic and for those users, it's hard to play catch up once you've lost them. So, what would your sort of conclusions on the urgency of this, and when do you think the industry will be moving in this direction holistically?
Yeah, it's interesting. So I do think there's first mover advantage in this. I think relatively, some firms are starting to embrace some of these things, but it's not widespread. So I do think there's an opportunity to capture increased new customers, increase market share, and particularly as the demographics then shift, companies who've done that are well positioned to retain and grow those customer bases. So I do think that's true. I don't think, I think again, some of the things that we're talking about here, they're not risky. The technology's proven, the solutions are built in some cases, and therefore, of course, so you've got to outweigh that risk with the advantages, and the investment isn't particularly high. So to me, that's a good equation to where you want to be. Where you might want to not be the first mover is if all those things are not true, and you've got it out there. It's unproven, you've got to outlay a lot of money, etc. That's not the case in this. So I think that the risk reward profile is pretty good, and the benefits will be there in the longer term. And I think once people have got clients, it's new customers, it's going to be easier to retain them. So I do think that equation leans towards a quicker action rather than waiting to see. I don't see the advantage of doing that at the moment.
Yeah.
In my view.
Yeah. Okay, well, maybe that's a good stepping off point to look at some of the questions that we've been getting through during the webinar. And I guess the first one is just leads off from the answer you were just, or the comments you were just making, Stuart. The first question we have is, why have relatively few wealth managers and savings and investment firms embraced open banking? I guess you've talked about that a little bit already, but what would you see as the top 2 or 3 reasons for that?
Yeah, I think maybe perhaps not so much competition as other sectors or threat of competition. So people, generally, if companies are doing well financially, they're less incentive to try something new or invest. So I think that's one of the reasons. I think the regulations haven't particularly affected the sector as they did banking. So there was no mandate. It's actually pushing people either to look at some of this stuff, and therefore there's less familiarity with it, and they're less thought about what you do in this sector. So I think they're probably the top 2, really, if you ask me. Yeah.
Okay. Next question we've had through is, how important is it, do you think, to have an open banking capability that is integrated into our back office settlement and cash and custody systems, and what considerations should we be making on this topic?
Yeah, I mean, you touched on this a little bit earlier, but generally I always like, when I'm talking to people about digital transformation, accelerating their digital journey, focus quite a lot on the customers first, in terms of what the customer needs, and and the stats prove generally, if you're customer driven and you're looking at providing a good customer service, you'll drive value for your company, right, through revenue and probably. And I think, certainly in banking, I've seen that's really a focus for most banks, right? And also in other financial services companies. So that I think is really is kind of overriding. But then there's no point in just having there's no point in your customer solution stopping at your customer if you can't support that in the back office.
Yeah.
So you can give what I'm saying is you can't give all this functionality to the customer to do stuff if then it just sits there waiting for someone to process it in the back office. So an end-to-end solution absolutely is paramount to unlock the value. And that's the value in terms of actually providing that service quickly to the customer. But also actually then, as we talked before about all the processing costs sitting in the back office. If you want to reduce those, you need the thing to flow through into your back office. So to get the complete picture, drive all the values, you need both bits absolutely to this.
Yeah, you're right. I mean, if you develop a project and implement open banking on the basis of giving a better service to your customers, but then you've forgotten that a certain part of your back office process will break down and a bit of cash is sitting there, and that means they don't get their money from their SIP for a week. Well, you kind of haven't improved their customer service.
So then you said you want to recommend them an investment, perhaps through it you've seen that there's an opportunity, maybe they've got surplus cash sitting in their account. You want to be able to then allow them easily to transact on that automatically if they choose to do so. So that's the full service. And we all sit there with our apps doing various things, I'm sure at the moment, and wanting to transact, if that's in banking or if you're buying something off the internet or whatever, and you want it done very quickly, what people call a seamless customer journey, right? You want it done instantly, quickly, with the minimum fuss, with a few clicks. And to me, that's ultimately what you kind of want to have out in front there. And if you can achieve that sort of customer experience, it's going to drive a lot of things for your company in terms of growth and revenue, etc.
Okay, let's do a couple more questions. So the next one someone has raised is, I've heard people discussing open finance. Is this real, and how does it interact with open banking?
Yes.
Sorry,
go ahead. No, what are your thoughts on that, Jeremy?
Yeah, I mean, it's interesting because that has come up in a few recent meetings with people we've spoken to, and I mean, from my perspective, firstly, what is open finance? So it's similar to open banking about sharing of data, but it's broader than just banking data. So in theory, it would mean the ability to aggregate much more holistic view of an individual's financial position from a wealth perspective, property valuations, all of your assets and cash essentially in one place. But from where, so we know some organizations who are developing these sort of capabilities. We're talking about things like screen scraping of data in the public domain that users have given approval for organizations to use, and then aggregating that in a big visualized application for then the users to use. So I personally, I can sort of see the use case, I can see the commercial value, but in terms of where the industry is at, it does feel like kind of getting ahead of ourselves a bit. When you think of open banking as we've sort of described it, is still quite a nascent sort of early stage in the industry. Starting to bring open finance into it is, well, it's very interesting, and maybe in 5 years that will be the new norm, 5 to 10 years even. But to start integrating that now seems a little bit like a bridge too far from our perspective.
I mean, I think just coming back to immediate opportunity, I think we know that because that open banking is in place, I think a good thing for the wealth and investment firms is that there's an opportunity there to grab that open banking data and then integrate it with the data they already have for their customers. So they're in a good position because there's that mandate and the ability with the customer's consent to go and get current account information, which really from a financial management perspective is the missing piece, because that's what people really use day to day. So that's an advantage that if you hold all the investment and wealth details, just adding that gives you a very good holistic and balanced picture of the customer's finances and allows you to do some of this other stuff.
True.
Which is a unique position. Now, in a world of open finance, then that's more of a level playing field, and then everyone can eventually get that. But I think that's a fair way off. There's no real fixed timetable for this. I think absolutely it's the intention of the UK government to move towards that. And if you read the sort of the statements from the various bodies on it, but there's no timeline. It could be a few off, and I think there are some legitimate concerns around that in terms of, obviously if you're exposing more and more data, there's more potential of data privacy misuse issues that people are concerned about, that need to be managed. There's also concerns around cost and competition. So actually asking people to expose their data and making that mandatory brings a cost, and that actually favors the larger players. And we saw at the beginning that actually it was the larger players in the industry who were asked to effectively foot the bill for this work. But if you really want to open it, then and you're asking people to comply with all the regulations, that's sort of counter to that. So I think there's some things people need to work through still. So I think that is the eventual place we'll get to. But to your point earlier, it doesn't seem like something that's going to happen imminently in the short term.
Okay, let's do one last question. So I guess this question links back to almost our opening discussion around what happened in banking first, in open banking, and then how the wealth industry is reacting to that. So the question is, what do you see as the overriding benefit of wealth managers offering open banking to customers when they can already get it through their banking app? So I guess, the hypothesis as well, you can already get open banking with your bank. Why? What's the threat to wealth managers of not doing something?
Yeah, I mean, I think to me it comes down to customer experience again. So having to flick between apps is a bit of a pain. I mean, I spent a bit of time this when I was kind of looking at myself, how do I get all my finances in one place? And it's very difficult at the moment. And I'm going to multiple places to get that. So I think, to me, if you can offer that, then that's attractive to customers. And the wealth investment managers are a good place to do that. And then just, so I said, make it easier for people. And that's what a customer-driven strategy does. So although you can do this stuff, it's quite clunky at the moment and difficult to navigate to. And therefore, of course, you don't get advice holistically or things that really, you can't get that personalized experience because people don't have the complete information to do that for you. So that's the advantage to me in pulling it together in one place.
No, I'd agree. I mean, looking across the industry and what people are doing, it wouldn't take that much to differentiate yourself and offer a more sort of integrated, flexible mobile application. So to me, there's a clear opportunity there for the wealth managers. So I think that comes to an end for the questions. If we can go on to the final slide, please, we'll just wrap up on next step. So thank you for everyone attending this session. Feel free to contact either Stuart or myself for a discussion on any of the topics that we've spoken about today. Our details are there on the screen, and will be available for you on the portal to contact us after the call. So many thanks for your time today. Hopefully you found it useful. Thanks for the discussion, Stuart, and thanks everyone for attending. Hope you have a good day.
Jeremy. Great to talk to you.
Thanks, Stuart.